Our next guest is warning of the consequences this could have for startups in Silicon Valley. Epistrophy Capital managing member and Drill Down podcast host Cory Johnson is joining us now. Cory, it's fantastic to see you. Cory and I used to work together, of course, in prior lives. You have some really good perspective on this. You've been in the Valley for a long time. And I guess, first of all, it started us out with you're in a cool looking space there. But actually, that feeds into the story that we've been discussing. So tell us about that.
Well, I'm in the San Francisco Ferry Building at a place called Shack 15. And it's a private club. And it's also, there's a co-working space here where I'm surrounded by venture-backed entrepreneurs, many of whom worked as a financial partner with Silicon Valley Bank. And they were freaking out. I mean, people here, particularly on Friday, unable to get their money, unfamiliar with this. And I think it's we're at a point where you have a generation of people in technology who pretty much have seen technology go in one direction, employment go in one direction. You have many generations of investors who, over the long haul, have seen interest rates go in one direction. And that is technology going up for a generation, straight line, and interest rates for 2 or 3 generations going generally down. And you have both of those things changing at the same time. A run on a bank that people in this building, entrepreneurs who have staked their lives, they can program code, they can understand they can read the blockchain, but they maybe not be able to read a financial statement. And I think there was a level of stress here that was really palpable.
I'll tell you what, I've read some bank financial statements, and I don't blame them for.
Exactly.
And let me just ask you, because on the ground there, Silicon Valley Bank, what is it, a 4-decade-old institution, has really become ingrained not only in the institutions there, but also the people who work for those institutions. It is the Bank of Silicon Valley. And can you just get from, I guess, a cultural perspective, tell us what the fallout is here?
Well, I think it's hard to understand how what it's like if you're a young person starting a business or an old person starting a business to walk into a bank and say, hey, I've got this idea, I've got this PowerPoint deck, I've shown it to 100 people and 5 of them want to give me some money, and it's 50 grand or it's 150 grand or it's $1 million. Would you please take me seriously? And Silicon Valley Bank will sit down with these entrepreneurs and roll out the red carpet and say, here's an account. Here's a credit card with a little bit of money on it. Here's some discounts you're going to get with Dropbox or with Google Analytics. We're going to have regular presentations on how to spruce up your pitch deck or how to deal with venture capital investors. Venture capitalists who are starting venture capital funds can go out and make an investment when they see a good deal and not have to make the capital call to their partners. They can just call Silicon Valley Bank and say, loan me the money for this ridiculous PowerPoint. I met this kid in a coffee shop with a PowerPoint slide. I think it's the next Google. Loan me the money. I've got the backing for my investors. I'll go to get their money later, but that way I can make the investment quick and not make this deal. That's not the kind of deal you can get from a money center bank in New York City. That's the kind of deal that Silicon Valley Bank recognized is how the next Facebook, the next Google, the next great invention from Silicon Valley, next Zoom, you name it, can happen out here. The next Uber, right? All of these things are happening under the nose of Silicon Valley Bank. They understand why that's a different kind of risk that other banks don't really understand because they're not here.
So where are these guys going to go now? I mean, we talked about a report earlier where Bank of America is gaining a lot of deposits from this. I doubt. I mean, I don't know, but I doubt Bank of America has that same kind of approach that you're discussing.
They don't. They absolutely don't. I mean, we've all had that experience as individuals using those banks. They don't care about the small guy. Even the bigger guys, they don't care about. And the small guys who can become big guys, they'll say, come see me later. So the question is, there's a societal question, right? How do we want, and you asked just the right question of your last guest, right? Do we want the money center banks, the too big to fail, to get bigger? Or do we want diversity in lending? And, I think the other thing that's missing here is, there's talk of should we have regulation, shouldn't we have regulation? Should we have bailouts of failed banks? Should the bailouts have limits on them? I think we also have to look at how the regulations work. The FDIC audits have been a joke. And we saw that with what happened with Silicon Valley Bank. If you talk to someone in the banking industry, they're terrified when the OCC comes in. But the FDIC audits, they think, are not as serious and worrisome. And so I think that, the regulations we have could work better if we gave the regulators the ability to do their job and the impetus to do that. And I think certainly they're going to be feeling that heat as well. But I think that, that's a kind of a different question about how the banking system works and how it can serve people. First Republic Bank now, and to be fair, we are owners of First Republic Bank now and long the stock. But my experience of them as a bank, terrific bank for individuals who've got money, terrific people to deal with. I think it's a fantastic franchise. They have not jumped into this Silicon Valley pond that is in their backyard. They have they've dispersed their investments across a lot of different places, I think, because they weren't comfortable with that risk. Now, Silicon Valley Bank grew a lot faster than First Republic as a result in the last 5 years. But they manage their risk in terms of their lending portfolio and their book of business very differently. And I do think there's a lot of money to be made to serve these entrepreneurs that are starting the future of America and the future of our world.
And that almost squeaked by me there. You own First Republic shares. You guys own First Republic shares.
Yeah.
How does that feel right now, Cory? I mean, especially S&P just
fun.
downgraded the debt to junk
exciting.
Today. Are you adding more as this is all ongoing?
We're managing the position. It's a small position, but it does seem that, to the point, again, the point of your last guest, depositors are money good, and the market's treating them like they're money bad right now. There are some banks on sale. Maybe First Republic is one of them. But I think that, the baby is out with the bathwater. I do a podcast on a regular basis called The Drill Down, and we had the Washington Federal CEO on, another bank very concentrating in lending, in this case, lending into commercial real estate and within commercial real estate into apartments. He came with us on Friday and said, look, we're good. And our lending book is strong and our book of business is strong. And that stock actually rallied this week. Now, I don't take positions in things that we cover on the Drill Down podcast, but I think it was interesting to listen to the regional banks, at least one regional bank in this case, come out and say, we are money good right now, and our business is doing fine. And yes, there are going to be deposits looking for new homes. And I just hope as a citizen that it's, and as someone deeply involved in this economy, that we have a diversity of lending and a diversity of risk, not all concentrated on a couple of banks in New York that maybe don't serve their customers as well as other smaller community banks can do so.
Agreed, and the devil is in the details. Really got a lot of that presentation and learned a few things. So thank you for your boots on the ground report there. Epistrophy Capital Managing Member and Drill Down podcast host, Cory Johnson.